Super Micro Computer has seen a 20% jump last night, post-market, and even today in the pre-market session, we still see it standing at a 15% increase while the rest of the market is pretty much dumping. Now, as far as that could go within the overnight session, but the idea here is that a lot of people are looking for something quite bullish to potentially form from this overnight jump. Some people would be looking maybe to break the high of the previous rally we've had. That would mean a push above $51. Some may be looking to see a complete reset within the orange wave B. That would imply a break of at least $66, likely pushing maybe even into the $100 region. Some may be even looking for new all-time highs. And I'm not denying the possibility for any of this, but I do see a risk that most people don't seem to notice here. So today I will share with you exactly the levels of resistance that this move needs to break to actually prove it is going to deliver something significantly more bullish instead of following this orange path leading to much lower prices. Welcome to the trade setup. So in the case of this structure, we have been tracking this last rally to have been only a wave B up, right? We have been tracking a 3-wave pattern here that has pushed perfectly into the 78.6% retracement. It did actually manage to get a brief break above it, but nothing substantial, that is about a trading day above that level. And at that point, it got rejected into what seems to be a quite aggressive impulse to the downside. And that is the key here. Because even if I choose to track this as an impulse to the upside, right? A 1, 2, 3, 4, and a 5. In which case, this couldn't be a wave B. I would expect a 3-wave correction to form into the support region I would have for a wave 2, right? I shared with you the levels of support extending down to $24, the 78.6% retracement. We wanted this to hold, which seems to have seen a perfect reaction. It did provide the necessary support, and these are the levels it has seen this bounce from. But we also needed to see a 3-wave correction. Is it the case here that we are looking at a 3-wave correction? Well, technically possible. I might get away with tracking this as an A wave down, have this as a B wave up, and then a C wave down. And that is actually the base for the bullish case here. But this interpretation is not perfect. We cannot be certain that a bottom is in within this structure. We cannot have a particularly high confirmation level that the correction has formed a 3-wave pattern, as within this structure, the wave C would have only reached the 61.8% extension of the wave A. Well, that is not really ideal. Most often, the wave C will reach, at the very least, the 78.6% extension, while the 100% extension of the wave A is the ideal target. Now, I will give it the fact that it has gotten close enough to the 78.6% extension. It could be the case that this wave A had bottomed here, in which case it would have perfectly touched the 78.6% extension. So we certainly have a bull case here. But can I not simply track this as a 1, 2, 3, 4, and a 5? It might even be a better fit. Now, this is the type of decision that everyone will need to make for themselves on whether they believe this to be one scenario or the other. But then when it comes to the execution, I believe we are looking at a decent potential here. And it's not even necessarily in terms of probabilities that one path or the other will follow through with higher likelihood, but rather because within this structure, it has pushed into the last level of support very clearly. At this point, if we are to indeed see a rally, indeed see a break above any of the levels of resistance that I will share with you in a moment, any interpretations that would really be worthwhile to track, it would most likely have to hold the current lows that are standing around $23.70, around the 78.6% retracement. Certainly, at this point, if we see a break below these levels, we are looking at an increased risk that this orange wave C would be much more likely to unfold in a rather direct fashion. Now, in terms of support, we actually do not have much to look at. We only see some pre-market price action, just a big jump. but we have the levels clearly defined. The bottom is expected to be in. We cannot trust a structure that would see at this point a break below $23.40 and ideally not even get close to these levels, to be honest. Already, if I see a push even towards $24, $23.80, the likelihood of it working out is nearly gone anyway. No, we want to see a bit of strength here, but we do have some resistance levels to look out for. We definitely can define some pretty valuable levels, in fact. And primarily, it will have to be for this idea of a wave 1 being down in the orange interpretation, where we are looking right now for the wave 2 before it continues, before this structure extends lower within its downtrend in the orange wave C. Keep in mind, even from a larger time frame perspective, we are still within a downtrend. This has begun more than 2 years ago, and the risk that we will see further lows is still quite apparent here. Now, in terms of resistance, I'm watching here up to the 78.6% retracement of this entire decline in the wave 1, which means we are looking at resistance to really start at $31.60, but really we are looking all the way up to $43.40, and only with a break above the 78.6% retracement, and that should be a sustained break, let me be clear, are we looking with higher likelihood that we will see a breakout from this entire structure. One important aspect here, if we actually see the 78.6% retracement broken, I believe the bullish case is on. I believe it will have become much more likely that the internal wave B top will not hold, right, $51, and quite likely, not even the larger wave B top will hold, $66.40, and we could very well be looking for a break into the $100 region, but only if we get a sustained break above the 78.6% retracement, here in orange, $43.40, do we start to shift into the favor of this scenario. Now, here's the thing. Even before it reaches those levels of resistance, there is actually plenty of internal resistance. I've shared with you this idea of a 1-2. Well, let me be clear, it's not the only possibility. It could be the case that this is a double 1-2 already, which means that it doesn't need to reach those levels to be able to extend directly lower. On the flip side, the levels of support are clearly defined, and most people should be able to place their stop loss based on these expectations. In addition to that, I am certainly watching out for resistance here in the region of these previous highs, right, around $29, where we are a bit above that, but I wouldn't be surprised that we see a retracement today. Some selling, as the unfortunate retail traders who have bought the top here would likely be looking to exit, happy that they even got to a break even. That's not the only level. We also have structural resistance around this area, $29.40, exactly where we are currently at, and pretty much along this move up, we have various different levels that should be expected to prove rather difficult to break, right? This entire region where it just formed a sideways pattern really is likely going to provide some resistance as well. And then previous major highs are certainly to be considered. But really this goes pretty much only into the $35, $36 region, and beyond that we are watching the relevant Fibonacci retracement levels, the 61.8% retracement and the 78.6% retracement. And for now, this is about the data that we can extract. We have clearly defined the levels of support that we right now need to hold. We have defined the levels of resistance that need to be broken, and even a slight hunch on what we can expect the price action to do today. Not to be taken as a guarantee, however. And for now, we will stop here. If you want even more from me, you can check out the Patreon, but these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.